I'm thrilled to be back with so many visionary innovators and titans of industry, the most brilliant in the world, actually. So many different locations, and they come from all over, but this is a very special country that I'm in, and the business leaders here at APEC are really fantastic. So many friends, and I want to thank our host at this important summit, President Lee of South Korea. He's a terrific person, and I'm going to be meeting with him this afternoon, and I look forward to that very much. The Republic of Korea is a cherished American friend and a close ally, and as we can see in this beautiful city, it's truly one of the most remarkable nations anywhere on earth. Here in this peninsula, the people of South Korea have forged a miracle of economic development like you rarely see, an industrial and technological powerhouse, and above all, a free society and enduring democracy and a thriving civilization. And I want to congratulate you. It's very few places like it. The entire world should be inspired by all that you have achieved, and they study you, and they do so much to understand what you've done, but most of them don't get it. And that's probably good for you. Keep it this way. Most of them don't get it. They want to get it, but it doesn't quite work out for them the same way it works out for you. So that's a great tribute to you. We have some very special people with us today, and I want to thank for the great job he's done, and also for being here, Secretary of State Marco Rubio. Marco, you're around here someplace. Where's Marco? Marco, thank you. Man who's doing a fantastic job, who understands the markets maybe better than anybody. Our Treasury Secretary Scott Bessent. Scott, thank you very much. And somebody that you're dealing with, who you made a very good deal with, because you have very good negotiators, but he's pretty good too. Howard Lutnick, Secretary of Commerce. Thank you, Howard. U.S. Trade Representative Ambassador Jameson Greer is a fantastic person. And your career's Minister of Trade, Industry, and Resources, Mr. Jung Kwan Kim, who's an incredible man, actually. My people say he's very tough, however. We wish we had somebody of a little bit lesser caliber, but they decided not to do that. And so many other distinguished guests are here, so I just want to thank you very much. It's an incredible room. It's a beautiful room, by the way. All those beautiful people up there, so high up. This place is packed. Thank you. Look at it, we're waving. Thank you very much. But as you know, APEC unites Pacific nations around our growing economies and promoting our shared interests. And today I come with exciting news from one of the largest Pacific nations. We'll call ourselves a Pacific nation, but one of the largest of them all, the United States of America. I'm pleased to report to you that this afternoon, after 4 years of weakness, disaster, really decline, America is back, and it's back stronger than ever before. We're doing numbers that nobody's ever seen before. We're the hottest country in the world, actually, and I say that with other countries represented, and they admit it. But I do say it very proudly. 1 year ago, our country was in very, very serious trouble. Some people thought our country was dead. Now we're literally sort of an inspiration to a lot of other countries. We are indeed, I use the term hottest country, but we're the hottest country anywhere in the world by far. The United States is blessed with right now, the strongest economy, the strongest borders. This all happened over the last 9 months. The strongest military, the strongest friendships, and the strongest spirit of any nation on the face of the earth. This is a golden age in a short period of time. I knew we could do it. I didn't know we were going to do it this quickly. It's a little bit more than 9 months. So in less than 1 year, we've secured commitments for over $18 trillion of new investments. As an example, the previous administration, in 4 years, they did less than $1 trillion. I think much less, actually, and hurt our country very badly. Who would have known? But we're going to be 18, so I figure that we'll probably be at 20 or 21, maybe even $22 trillion of investments coming into our country by the end of the first year of my second term. And, you know, we had a tremendously successful first term. We had the strongest economy in history for our country, strongest we ever had. But this is, I think, blowing it away. We have great policy. We have some very good things happening. The stock market, as you know, is set 45 all-time highs since in a period of, it's pretty good, in a period of 9 months, breaking new records week after week, including one just yesterday. We set the record GDP growth in the second quarter, and that's with all of the things that we're doing. When they are built in a year and 2 years, we're going to go through the roof. I mean, we're going to see numbers that I don't think have ever been seen before. But even during this period of a little bit of a period of transition, you could call it, because I think we're in an economic revolution in America. We went at 3.8%. We're up 3.8% GDP, triple and even quadruple the rate that a lot of people thought we'd be. They thought that during this period that we'd be at a much lower rate. Some people predicted 1.5, and we're going to be very close to 4. The next quarter, we're expected to be at about 4% growth. And after that, I mean, I can't even predict, because when all of these factories that are moving in, the car plants are moving in. Yesterday, I was with Mr. Toyota in Japan, and he's just announced he's going to spend, they are going to spend $10 billion, and they're going to build new car plants, and they're going to build them in numerous states, about 6 or 7 different states. And we're bringing our car industry back. We're bringing AI. We're leading everybody in AI. We're leading every nation in AI by a lot. In 9 months, we've lifted over 600,000 Americans off food stamps. Wages for workers are rising at the fastest pace in more than 60 years. And meanwhile, energy prices are down. Gasoline prices are down. Grocery prices are down. Mortgage rates are down, despite the fact that we have an incompetent head of the Fed. He's incompetent. I call him Jerome Too Late. He's always too late. Jerome Too Late Powell. But he's out of there in another couple of months. We'll be very happy about that. We'll appoint somebody that we all like, because we should have the lowest interest rates of any country. Because without us, there are no other countries, really. I mean, the whole thing falls apart. You know, America always had the lowest interest rates, and now we don't do that. We're like number 28. It's ridiculous. And we're a much different country than we were 2 years ago or a year ago even. But you know what the crazy thing is? In the old days, I call the old days. I'm a little bit older. I'm looking at all these young, brilliant faces. I'm a slight, a couple of years older than you, just a couple of years. But in the old days, when you announced good news, the stock market went up. You announced good news, the stock market would go up. Now, when you announce good news, the stock market goes down, because people say, oh, that's terrible. You're doing well, that's terrible. Interest rates will go up. So they think because of that, interest rates will go up because that. It's inverse of what it should be. We're going to go back to the way it used to be. When we announce good news, the stock markets are going to go up. And that's the way it should be. And we're going to really ride that very hard. And when we announce good news, we're not going to have a Fed that's going to raise interest rates because they're worried about inflation in 3 years from now or something. When we announce good news, we want the stock market to go up, not to go down. And the scourge of inflation we inherited. We inherited the worst inflation ever that we've ever had. I inherited from incompetent people, and now we're down to a very low rate of inflation, 2.7%. And it's going to be a little bit lower than that. It's almost a perfect number. Believe it or not, you don't want to have 0. You want to have like 1% to 2%, and we're very close to that number. But we had inflation the worst in the history of our country. But factories are booming in the USA, and manufacturing productivity is rising 5 times faster than it was just 1 year ago. Think of that. Steel production is way up by 155,000 tons a week. Oil production is through the roof by 500,000 barrels a day. And mining of clean, beautiful coal, I call it clean, beautiful coal, is up by 2.6 million tons every single month. And we brought coal back into the picture. What you can do with coal today is incredible. So I call it clean, beautiful. I don't use the word coal, I say, because it's got a little bit of a problem, public relations-wise, the word. So we call it clean, beautiful. My administration's not allowed to use the word coal. They have to say clean, beautiful coal. We've given it a new name. It's a three-name deal. Even semiconductor manufacturing is rapidly returning to the United States. NVIDIA and TSMC have just produced the first state-of-the-art Blackwell chip that was 100% made in the USA. In fact, Jensen, who's an incredible guy, he might be here. I don't even know. Is Jensen here? I think he's around. Somebody said he's here. How is he? Pretty good, right? Got a chip that's like 10 years advanced, but he's great. And they're all, building now. They're building tremendous plants in the United States, Arizona, Texas, all over. We're going to have a big portion of the chip market just in a very short period of time. But these tremendous strides are also creating great jobs for our citizens. 1.9 million more American-born workers are employed today than when I took office 9 months ago. Think of that. Almost 2 million people more American workers. Nobody's ever had numbers like that. And those numbers are going to get much bigger, much better than that when we open these plants that are being built all over, the AI plants. I've never seen plants this big. I built shopping centers. I built a lot of things. But if you spend 250, 300 million, you can build a big shopping center. These people are spending $50 billion to build a building. And I say, what's your product? Information. I said, well, good luck. That's a lot of information you're going to have. But, they're the smartest people in the world are doing it, and they all think it's great. All I can do is make it easy for them. And what I've done, one of the things that I'm most proud of, because I thought of it like every, country, our electricity production, our energy production is not, it's not, nobody ever saw this kind of a revolution with the AI. And what they need more than anything is electricity. So if a country was able to do that, it would be, pretty unusual. It would be very hard, and maybe you could say impossible. So I came up with a concept when they build a massive plant, sometimes the size of Manhattan. Think of that. The size of Manhattan. These plants are the biggest. I've never seen anything like it, actually. Nobody has. There's never been anything like it. But I let them build their own electricity generating plants with it. So they're building their own electric. They're sort of becoming an electric producing company in addition to all of the other things that they produce, including information. And what they're able to do is start immediately. We're giving them very fast permits. We're no longer having them wait for 10 years, 12 years, 15 years prior to rejection. They'd go 15 years and then they'd get a vote, a rejection. And by that time, their concepts were old and obsolete anyway. So, it's terrible. And we're getting it done rapidly, literally rapidly. And they're coming up with electric generating plants, the likes of which nobody has seen. The companies are standard companies that do electricity and create power companies. They've never seen anything like it because we have a level of genius, a level of people that are designing things that nobody's ever seen before that produces vast amounts of electricity for their plant. And if they have extra electricity, they sell it back into the grid. So they really, it's really been amazing. And it allows people to start building immediately, and they can't blame the government. They won't blame me because I didn't produce enough out of the grid that's 200 years old. So we have more people now working than at any time in the history of our country. We've sort of just begun. It's hard to believe, actually, if you knew where we were 2 years ago. All of this is incredible news for Americans and for nations around the globe, and it is for South Korea because we're partners. We're serious partners. We're wedded, and we have a very special relationship, a special bond. In fact, we're working with you on shipbuilding, where you're going to come in. We were the #1 in the world during World War II. We produced a ship a day. Can you believe it? Tankers and freighters and this, a ship a day. And today we're not really building ships, and we're going to start, and we're going to have a very thriving shipbuilding industry, and we're working it with South Korea very much so. In fact, some of the people in this room, they bought the Philadelphia shipyard. I think it's going to be one of the most successful yards in the world, anywhere in the world. It's great. It's known for incredible production years ago, and sort of through bad management or bad thinking by people that were prior to me. I mean, you have to blame the president. You can give the president credit or blame the president, but I blame the president. They allowed the shipbuilding industry to go away, essentially, in our country. We're going to bring it back very, very powerfully. When America thrives, our partners thrive, and our alliances thrive with all of the countries. The Indo-Pacific thrives, and that's good for all of us, and the entire world becomes safer and wealthy and greater than ever before. We get along with a lot of countries. We solved a lot of wars and a lot of problems, and that's all good for all of us. The extraordinary American turnaround that I've just described has been achieved not by just continuing business as usual back in Washington. If I didn't win the election, and we won it in a landslide, we won by tremendous numbers. I had a whole thing too big, you have to say, too big to rig. We didn't want any rigging. We had these great polls going in. I said, don't believe the polls. Pretend we're 1 point down. Always assume we're 1 point down. And everybody voted. We won in a landslide. We won all 7 swing states. You have to win the swing states. And we won all 7, which is something that rarely happens. But to win the popular vote by millions, we won everything you can win. The Electoral College by a tremendous amount. We won in counties. They have counties, thousands of counties. And we were 2,700 compared to 525 actually. So think of that. We were 2,750 compared to 525. And that's why the map shows all red. Red being Republican, not something else. Red being Republican. Only a few people understand that one. My administration has rejected the old model of incompetent government that punished success and rewarded failure and made building anything almost impossible. When you come into our country, and many of you are doing that, but when you come into America, you're going to get service like you've never seen before. Quick permits, and we want safety, we want great environmental, we want everything good, but it's going to go quickly. We're rewarding those who build and create and hire and invest in the USA, and we're making America the best place on earth to do business, and that's what it's become very quickly. We have some wonderful people. Lee Zeldin at Environmental, he's incredible. He gets the right result quickly, and he makes sure that people do the right thing. But we will have the best tax rates, the lowest energy costs. We have the lowest energy. We have tremendous amounts of energy, more than anybody else. We have the most oil and gas and coal, more than any other nation on earth. So that's a big advantage that we have over others. We have the lowest regulatory burden. In my first term, we cut more regulations than any other administration in history, and we're going to do about the same level right now or more if we can. The most advanced technology and the fairest trade deals anywhere in the world. And for decades before I took office, our country was run by legions of bureaucrats who were always looking for a reason to say no. Why? How can we say no? They wanted to say no. They thought that was their job, and it's really just the opposite. We work to say yes. So now we have a president in the White House who cuts through the red tape and excuses. We don't stand for excuses, and says yes to big ideas and bold initiatives and grand ambitions so that America can have great industries, great dreams, and to be the greatest nation on earth, which is where we are now, actually, in a very short period of time. We're rebuilding things that are incredible. We have the strongest military in the world. We have the best equipment. We have the best manufacturers of equipment. And South Korea is buying a lot of our weapons. We make the best. We have the planes and just about everything other than ships. And we'll be there very shortly with ships, too. But the only reason it's not ships, because, I don't know, for some reason they stopped doing that. I guess they went on to other businesses. But there are some basics in life, and one of the things you need is ships. I always say you need steel, you need aluminum, you need this. There are things you don't need. A lot of things that a country doesn't need them, but things you need steel. Got to have steel, and we're redoing our steel, and some of the people in this room are very involved in that. We're redoing our industry. We're starting to produce large amounts of steel, massive amounts of steel. We'll be right at the top in a very short period of time. The mills are opening again, and they're opening up big. And again, it's national security, and it's because of tariffs. We're reclaiming our heritage as a nation of builders and doers, and we're pioneers in a sense, but we're really doing it again, but we're doing it even better than we did the first time, which is the first couple of 100 years. And we're pursuing this vision with unrelenting drive and really unprecedented success. In July, I proudly sounded law. It was very important. I went into the archives. We looked at every possible thing you could look at, and I signed into law the largest tax cuts in American history. And as you remember, in my first term, we cut taxes from 39% down to 21%. And now we've done even better than that, putting more money in the pockets of American families that make up the largest consumer market on earth. For businesses and manufacturers like those in this room, our tax law includes 100% expensing for all new factories, plants, and equipment. So that means you can write everything off in the first year. So that's like we had in the first, except this goes for a period of 10 years. Whereas the other was over a much shorter period of time. And I actually think that we had such tremendous success. I always said that was the single most important thing, the expensing, the one-year expensing. Upon taking office, I signed executive orders that require that for every one new regulation, 10 old regulations have to be eliminated. I did that in the first term, too, and it worked. So if you want a new regulation, you have to get rid of 10, and already we're exceeding that limit, reaching closer to 30 to 1. Our people have done that, our great secretaries and other people in the administration. So we've been actually at a level where we sign in a new regulation, they get rid of 30 old. We're sort of cleaning up the books because many of these regulations are obsolete, they don't belong. And some were so horrible, they were obsolete, but they really stopped projects from being built, and we're getting rid of all of them. We've pretty much done that. We have streamlined permitting for all new energy and mining projects. It used to take decades for an administration to get something approved, and now it's a process that will take, generally speaking, less than 28 days. In addition, across government, we're guaranteeing a rapid and expedited regulatory review for all new projects in the United States, and that's worth billions and billions of dollars to industry. You spent more money on trying to get something approved than you do in building the plant itself. You know, in Louisiana, my first term, there were 2 plants, and one was financed by a tremendous group of Japanese investors, and it was about $16 billion, LNG plants. Another one was financed by people from South Korea and others. LNG, both of them, massive LNG. They were in the review process. One was 15 years, one was 16 or 17 years, and they were then told, forget it, we're not going to get it approved. So I came into government, I heard about it, and I love Louisiana. We did very well there. We did well in just about all the states, but we did really well in Louisiana. And so I got involved. The one plant that was in for almost 15 years, I got it approved in 1 day. 1 day. In fact, when we called the people to say that they got approved, they didn't know what the hell we were talking about. They said, you got it approved. We sort of gave up on it. I said, no, you don't have to give up. We got it approved. The other one took me a little bit longer. I didn't do as good a job. It took me 1 week. And they got approved, and they got built. They're massive plants, and they're doing unbelievably. They're like setting records, LNG, big, it's like the Empire State Building lying on its side. And all I know is, I looked at it. I said, what kind of a building is that? All it's got is pipes going back and forth. I never saw anything like it. But whatever it is, it works. And they've been very, very successful. But think of it, 14 and 15 years, and I got one approved in 1 day and one approved in 1 week, and they've been doing great, and they've been good for the environment. I've shrunk the size of government for the first time in many years since January. 100,000 bureaucrats have left the federal payroll. You've probably seen that. So we're creating real jobs. We're getting rid of wasteful jobs. Government spending is down 2.5% this quarter compared to 1 year ago. It was going through the roof in the previous administration. And in stark contrast to 4 years ago. I mean, if you look, 100% of all new jobs created in America under my administration have been created by the private sector. Think of that. The government created no new jobs. The private sector created the record number of jobs that we're talking about. That's a country. That's really a success. It's easy to create government jobs. I could say, add a lot of people to your payrolls. I can fake up the numbers if I want, but that's not the way you build a great country. You don't do that here, and that's not the way. But it's a good way to show good numbers, I'll tell you. You just tell everybody, hire a lot of people. That's what they used to do under the Biden administration, under Barack Hussein Obama. You had, they'd say, hire a lot of people so we can make our numbers look good. I do the opposite. And we have real numbers. These are real numbers. There's truly no better time to invest in the USA. The results speak for themselves. Since the election, TSMC has pledged to invest $100 billion in the United States. So they're coming in from Taiwan. We have tremendous numbers of companies coming from Taiwan and building in the U.S. Apple, $600 billion investment. Hyundai, $26 billion. Micron, $200 billion. SoftBank, OpenAI, and Oracle, over $500 billion. Amazon, $35 billion. Pfizer, $70 billion. Jera, $200 billion. Google, $25 billion. NVIDIA, $500 billion. Genentech, $50 billion. Johnson & Johnson, $57 billion. We're bringing back all of our pharmaceutical business. IBM, $150 billion. AstraZeneca, $50 billion, among many others, many others, too many to talk about. But one of the most significant factors in this remarkable surge of new investment has been my transformation of trade policy. 8 years ago, I came to this very summit. I was here. Does anybody remember? I don't know. I remember. Does anybody remember what I said? Yeah, there's a few hands up there. It must have been a great speech. 3 people. It's not too many people. But there's no reason to, because you saw whatever I said, I did. And for the first time, I laid out the principle that economic security is national security. Economic security, that's for South Korea, that's for any country. But economic security is, in fact, national security. I made the case that the global trading system was broken and in urgent need of reform, had to be fixed. The system had been exploited by countries that broke the rules at the expense of countries that followed the rules to a T, and asked the nations of APEC to be our partners in making the system fairer and more sustainable for all of us, and we all work together, the APEC nations. 8 years later, as I'm back here in Asia, and I'm pleased to say that the positive vision for revolutionary reform I laid out, it seems like a long time ago, is now a reality. What really seems amazing is that we did all these things. We stopped a lot of wars. We did so many different things, made our country strong. Thank you. Thank you. And the campaign seemed like so long ago. And I was reading something today in one of the journals, and they said, can you believe it? 1 year ago, I was campaigning to win. Think of that. It was about a week. In a week, it'll be November 5th. And November 5th was the election. I said, can you imagine that? Here I am, president. We've done so many different things, economically, militarily, peace-wise, peace through strength. And yet, 1 year ago, it's not long ago, I was campaigning. We didn't win. We were campaigning, and then we had the election, and we had a great election. And the spirit in our country is like incredible. If you compare that, we lost a lot of spirit in our country. Our country is depressed. They were very depressed, and they had a right to be. But around the world, we're signing one trade deal after another to balance our relationships on the basis of reciprocity. Very important word. On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us, because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both. And that's really a great result. That's better than fighting and going through all sorts of problems and, no reason for it. I think it's going to be a great deal for both, so I'll be meeting him tomorrow. A lot of people are interested. They're also interested in what we're doing, but they're interested in that. I can tell you a lot. The world is watching, and I think we'll have something that's very exciting for everybody, and that's also good for South Korea. It's good for all nations. We're ending gaping trade deficits, unfair trade barriers to market access, insecure supply chains, weak, pathetic supply chains, and much, much more. We had such bad supply chains under the last administration. It was embarrassing. And we're entering a new era of trade that truly works for both sides. Got to work for everybody. Deals have to be good for everybody. I've heard that all the time, and I never really believed it, I'll be honest. I said, if you make a great deal. The best deals are deals that work for everybody, especially when you're talking about nations. You know, when you're talking about nations, it really is a little bit different than you're doing a business deal and you want to just rip their hearts out, right? These guys know what I mean. They ripped out so many hearts. But when you have nations, it's a little bit different, you know? It's you gotta all balance out a little bit. When I announced reciprocal tariffs last April, some people thought it was wonderful and others really weren't so sure. They weren't sure. They didn't understand tariffs because tariffs were used against us. We didn't use tariffs stupidly. And we do now. National security. This week we proved once and for all that few critics, there were no critics left. The only critics are people that took advantage of us for many years, and now they're not able to do that. The deals we're signing with our friends and partners are making our alliances closer and stronger than ever before, and they respect us because it was so foolish. The people that ran our country were so foolish. With these agreements, our nations will extend our vital security alliances into the realm of economic security for the first time ever. We're forging new partnerships on strategically important industries like shipbuilding, energy, semiconductors, critical minerals, and, very important pharmaceuticals. We learned that during COVID. We had to rely on other countries to give us pharmaceuticals. You can't do that. You have to, certain industries you want to have there. You want to have your medicines made ideally in your own country. Many of our agreements also include deepening collaboration of industries of the future, such as nuclear, quantum, artificial intelligence, where America is #1 by a lot. Actually, we're really #1 by a lot. We're #1 in military consequence. We're #1 in military in the quality of the weapons. That's why everyone wants to buy for us. I'll tell you what we have a long lead on is submarines, nuclear submarines. We are so far advanced that by perhaps 20, 25 years. We're 25 years ahead of any competition. And not only are the tariffs strengthening our alliances, they're also bringing peace to the world. On Sunday in Malaysia, we signed the Kuala Lumpur Peace Accords, ending forever the war between Cambodia and Thailand. Thank you. Thank you. You know, it's interesting. We were making trade deals with Cambodia and with Thailand, and I sort of watch what I do. I don't go to the beach and sleep all day. I like to watch. And I see Cambodia, Thailand, among many other nations. And this is true for numerous other deals, too. But I see Cambodia, Thailand, and I read a front-page story about the fact that there were thousands of dead people along the border. And they fought for a long time. And I said, wait a minute, we're making deals? And they're starting a war? They were just starting, and it was vicious. Thousands of people were killed along the border, their two borders. And I said, let's call the head. I didn't know the heads of either one. I called them. They were both great people and sort of reasonable. I said, listen, you want a trade deal? We're not going to make a deal with you if you're going to be in war. Then I called Cambodia. I called Thailand. I called Cambodia, back and forth. And after about 2 days, we ended up with the help of Malaysia. Malaysia was like a mediator. We used a beautiful facility in Malaysia because it was too hot. The other two, and I don't mean hot weather-wise. I mean it was hot. It was too hot with bullets flying all over the place. And Malaysia was fantastic, and they helped implement it. The Prime Minister was great guy. Just left him. And within 2 days, we signed the deal. And the two people came in, they were like best friends. It was a beautiful thing to see. We saved, probably millions of lives. They've had a tempestuous relationship I said, for how many years? 500 years. I said, that's a long time. That's a long time. But we think this is going to be, hopefully, I use the word everlasting. Same thing in the Middle East. We hope it's going to be everlasting peace. They've never had peace. They've 3,000 years, and we signed in the Middle East. But I've ended 8 wars in 8 months, and in many instances, trade has played a big part in getting those wars ended. On top of it all, tariffs now projected to reduce our deficit by $4 trillion over the next 10 years, and I think actually much more than that. That's national security, because you can't have deficits and you can't have debt all over the place, and stops inflation and strengthening the dollar and ultimately balancing our federal budget, which I think we're going to do very quickly, only because of our policy of fair tariffs. And for any company that does not wish to pay the tariff, I say, you know, you could build your factory in America. If you build your factory in America, there is zero tariffs. But, you know, again, going back to the wars, it's so important. If you look at India and Pakistan, so I'm doing a trade deal with India, and I have great respect and love. As you know, for Prime Minister Modi, we have a great relationship. Likewise, the Prime Minister of Pakistan is a great guy, and the Field Marshal, they have a Field Marshal. You know why he's a Field Marshal? He's a great fighter. He really is. He's a great guy, too. And so I know them all. And I'm reading that 7 planes were shot down. They're going at it, and they're really starting to go. And it's a big thing. These are 2 nuclear nations, and they're really going at it. And I called Prime Minister Modi. I said, we can't make a trade deal with you. No, we must make a trade deal. I said, no, we can't. You're starting a war with Pakistan. We're not going to do it. And then I called Pakistan. I said, we're not going to do trade with you because you're fighting with India. And, you know, 2 nuclear nations. And they said, no, you should let us fight. They both said that. You know, they're warring. They're strong people, I'll tell you what. Prime Minister Modi is the nicest looking guy. He says, oh, and he looks like you'd like to have your father, like, he's a killer. He's tough as hell. No, we will fight. I said, whoa, this is the same man that I know. But after a little while, and they're good people, and after literally 2 days, they called up and they said, we understand, and they stopped fighting. How is that? Isn't that amazing? Now, you think Biden would have done that? I don't think so. Most people wouldn't have thought of it, but, you know, they wouldn't have thought of it. No, but here we are, we're doing deals. So you add an extra sentence, and you say you have to stop shooting at each other. 7 planes were shot down. You have to stop the war. And they stopped the war. And if it weren't for the tariffs, I said I was going to put 250% tariffs on each country, which means that you'll never do business. In other words, there's nothing you can sell for 250%. That means that's a nice way of saying we don't want to do business with you. You don't have to say that, because that's a nasty, we don't want to do business. No. You say we're going to put 250% tariffs if you don't stop the war. And they understood that, and within 48 hours we had no war, no people killed. I mean, it's makes me feel so good. It's we saved millions and millions of lives with all of them. Azerbaijan. If you look at, just take a look at that one. That was going on for, I think, 38 years, right? And President Putin called me. He said, "It's amazing. It's amazing. We couldn't get that war stopped. 38 years it went on, millions of people killed, and we got it done." And the 2 countries came in, and they were in the White House, and they started off here. And they got closer, 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 closer. After an hour, they were hugging each other in peace. It was amazing, actually. It was beautiful to see 2 very good countries, 2 very good leaders. One was there for 22 years, one was there for 7. And they both said, my entire political life, all I did was shoot people on the other side. And we got it closed up. And we did that 8 times. The only one I didn't do is Russia, Ukraine, but that'll get done too. That'll get done. I thought that was going to be an easy one because of my relationship with President Putin. He turned out to be a little different, but I think it'll get done. It's would have never started if I were president. That war would have never, ever started. So we've used trade to create peace in a lot of different locations. We also solved the war in Africa, Congo, Republic of Congo, and Rwanda. That was much smaller to do with trade, more to do with common sense. They were fighting for years. 10 million people were dead, and we got that one done too. So we did a lot of them. We did 8 in 8 months, and I think the other one's going to come along. I really think so. I thought that would have been one of the easier. Who would have thought we created peace in the Middle East but didn't get Russia and Ukraine? Because peace in the Middle East was undoable. They're looking, they're shaking their heads. It was undoable. We got it done. 3,000 years, okay? They never had peace. They never had anything like it. And we have all countries signed up, and the level of spirit and everything. I think it's going to hold for a long time, hopefully forever. Hopefully that's an everlasting one too. So in conclusion, at some point in your careers, every great business person and CEO in this room today has faced critics who said reform, innovation, and bold action would only lead to a total disaster, but none of us would be here if we had listened to the small minds with no vision. These are small minds with no vision. They had no understanding of success. They had no understanding of life and death. True success comes from having the confidence and the courage to prove the doubters wrong. And oftentimes you'll go the opposite way of almost everybody, and you'll be the one that's right, and the others will be the one that's wrong. And that's where you have your greatest successes. And that's what America and our Indo-Pacific partners really are doing this week, and what our businesses and entrepreneurs do each and every day. That's what you do, the most successful people in the world. Together we're solving the challenges that no one before us has ever been able to solve, and we're forging a free and open Indo-Pacific, and for all of the people, we're creating a future of dignity and security, prosperity and pride. From the rolling hills of San Francisco to the gleaming streets of Seoul, from the bustling factories of Toledo, Ohio, to the bright lights of Tokyo, from Pittsburgh to Palawan, from Boston to Bangkok, from Detroit to Da Nang, and from Cleveland to right here in Gwangju. Nice place. Did I do good with that one? Did I do okay? Gwangju. Good, beautiful place, by the way. We're strengthening old friendships, forging new bonds, building new factories, pioneering new industries, and creating a dramatically better world for our children and for generations to come. Together we will build a future of strong, independent nations on both sides of the vast ocean, joined by our common interests, united by common values, and reaching constantly toward a richer, safer, and more peaceful Pacific with fairness, persistence, and common sense. That's such an important two words. We will build together, we will trade together, we will prosper together, we will thrive together, and above all, we will win, win, win together like never before. We're going to have an incredible relationship together for generations to come. And I just want to thank everybody in the room. I know so many of you. You're incredible people. God bless you. God bless the nations of this great region, and God bless America. Thank you very much, everybody.
Well, that was U.S. President Donald Trump speaking at the APEC CEO Summit at Gwangju in South Korea. Let's bring in Bloomberg's The China Show anchor, Yvonne Nan. Well, Yvonne, as is typical with some of these speeches out of President Trump, he covered a lot of ground. He certainly spoke a lot about the U.S. economy and what makes the U.S. economy stand out versus other economies. Also spoke about alliances, and perhaps we got a little bit more insight as to how he's thinking and approaching the upcoming meeting with President Xi, and of course the meeting with the South Korean president later this afternoon. What were some of your takeaways from what we just heard over the course of the last 45 minutes?
Yeah. Joanna, I think this was sort of a sales pitch, really, that Trump laid out to the APEC summit here on, the U.S. is back, as he says. He talked about this 4% GDP growth for next quarter for the U.S., and that it is back to doing business and really creating, the regulatory hurdles that was in the past has now been basically come down, that U.S. is ready to do business with this part of the world. And that certainly was sort of the message that was sent here. It seemed like at one point he did kind of go off script and didn't read from the teleprompter and really talked about all the things that are going on in the U.S. economy. He's obviously had a bit of a jab on even the Fed and saying that, calling Jay Powell, Jay too late Powell, in reference to him being too late in cutting rates as well. And he says he wants to change America to where, good news is good news for markets here. No longer bad news is good news for this market, which really has been sometimes seemingly how we see the market there. And then he talked about not just when it came to trade deals, which he looked like he was quite upbeat about, but also about building alliances and also bringing peace to this region as well.
So let's talk specifically about South Korea and what's at stake when he meets with the president later this afternoon, because it seems that there's still a lot of details that need to be worked out, especially when it comes to investment, Yvonne. So what can we expect this afternoon?
Yes. And you heard that in the president's speech, right? He definitely praised the billions of dollars, hundreds of billions of dollars of investments that have been pledged by companies like TSMC. Toyota, that certainly was one that we had this morning where the company did clarify and say, this $10 billion that Trump talked about into the U.S., they didn't confirm that as well. So we're still waiting to see some clear indications here on what a deal with the U.S. and South Korea is going to look like as well. We spoke to the president a few days ago, and he said basically these major issues are still stuck right now. So ironing out, when it comes to these hundreds of billions of dollars of pledges and investment into the U.S. and how they're going to be funded, what the structure is going to look like, that's going to be something that we're looking for in the South Korean trade negotiations with the U.S. as well. They talked about shipbuilding. This is one thing that Korea, Japan has been looking to build up capacity, work with the U.S. there, and really kind of counter the dominance that China has. And when it comes to South Korea, it's about building the technologies of tomorrow. When they talk about collaborations with AI, cloud computing, quantum computing, even 6G. Those are some of the things that the South Korean presidential office said was some of the key things that they're going to talk about as well. Also ways to counter China's tech dominance here in some of these key technologies. So when it comes to South Korea, we're looking for some ironing out some more details on what this looks like. This is, of course, in contrast to what the good vibes that came from Japan with Trump signing a pact with Japan on certainly everything from auto tariffs and the like, capping that at 15%. So South Koreans also need to kind of have a deal, or else auto tariffs in South Korea could stay at 25%, which could leave some of these Korean car makers here at a clear disadvantage.
Yeah, that's a real distinction there, I guess, in tone so far from what we've seen with his visit to Japan versus what could be at stake with the meeting later on this afternoon with the South Korean president. But of course, the big one is happening tomorrow. That is when he's going to be meeting with President Xi. And he actually said he thinks they will make a deal with China. Do we have any further understanding of what may actually be included in this deal? Because I've been reading loads of reports overnight suggesting that U.S. would be willing to lower the tariffs on imports so long as they come to an agreement on fentanyl.
Yes, so that was kind of key that we heard in the last couple of hours. Even before President Trump stepped down here in South Korea, he was speaking to reporters on Air Force One on what he wanted to get out of it. Fentanyl was certainly front and center, and really talking about reducing those levies here now at 20%, and really looking for some commitment from the Chinese side on really curbing the exports of these precursor chemicals that go into fentanyl. So if that can be lowered, the Wall Street Journal has reported it could be lowered to 10%. That would be a quick win for China. Also, what we heard on Air Force One was this talk about NVIDIA Blackwell chips. So what President Trump is saying that he will be talking about these chips to China. That would be quite substantial, right? If, in fact, that the U.S. allows for these really highly advanced chips to be shipped and sold in China, that would be a major concession on the U.S. part of things. You may know before, it was up until now, it was all about H20, which were the less advanced ones that the U.S. has said, NVIDIA can ship to China as long as the government gets a cut of it. Beijing responded with no thank you, and basically urging its own companies to buy its own chips as well. So if we see something on Blackwell, that could be quite substantial. What we haven't heard too much about was these export curbs around rare earths. Trump said something could come out of that, whether China waters down their own export curbs. Of course, Scott Besson talked about a one-year deferral of those restrictions. That could be quite telling as well.
Yeah, fascinating, and also having a big impact on markets today. Bloomberg's The China Show anchor, Yvonne Man, thank you so much. Brilliant reporting and recap of what we just heard out of President Trump. Well, to Yvonne's point, what we are seeing is mild risk on this morning, but more so for the NASDAQ. NVIDIA, one of the names to watch, given Trump's comments vis-a-vis Blackwell. But we're going to talk more about that in the second hour of the show. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Trump arrives in South Korea for key meetings with Asian leaders, saying he expects to lower tariffs on China when he meets Xi Jinping tomorrow. Asian stocks rallying on optimism that AI will continue to drive profits at tech majors reporting this week, and on growing bets of a Fed rate cut. Plus, another big earnings day with banking majors UBS and Santander reporting later this hour, as well as energy giant Equinor. Well, it's just gone 9 a.m. across the Emirates, 8 a.m. over here in Saudi Arabia. I'm Joanna Versace in Riyadh, live from the 9th annual FII conference. It is day 2 here. Well, another day, another cracking lineup on the show. Coming up in the second hour, we have the CEOs of Gemcorp and JLL, in addition to State Street as well. We will bring you that all shortly. But let's go back to some of the market price action over the last 24 hours, because once again we are seeing a big focus on some of these AI names. Nvidia back in focus yesterday after President Trump made some comments to the effect of willing to give China access to some of those Blackwell chips in anticipation of that meeting with President Xi tomorrow. So reconciliation of sorts, and Nvidia once again right in the middle. The stock is up about 8% in after hours. Don't forget, we have a huge amount of Magnificent Seven names reporting over the next 2 days, so watch out for that as well. And we have the Fed meeting too, all happening today. A 25 basis point cut is expected. S&P futures up 0.2%. We've got Nasdaq up 0.3%. Again, keeping an eye on some of the chip makers there. The USD trading slightly firmer, so a bit of a turnaround from the pullback we've had the last couple of days. A bit of support coming through for the USD. And then Brent at around $64. The market once again really focusing on the extra supply that's about to hit the market. But also, I will say, keep a close eye from an energy perspective on what comes out of those conversations between President Trump and President Xi vis-a-vis China's purchases of Russian oil. Remember, we know that the U.S. are doubling down on their efforts to curb some of the oil that's coming out of Russia, specifically targeting those 2 oil companies. How is that going to manifest? How is it going to hit some of those Chinese refineries? Something to watch out for there as well. Well, here at the FII Forum in Saudi Arabia, global investors are looking closely at the kingdom's growing demand for private capital and its pivot to artificial intelligence. It's going to be a big focus of day 2. For more, we're now joined by Atanas Bostandjiev, founder and CEO of Gemcorp. Atanas, it's really good to talk to you. So we're here in Saudi Arabia, and as I was just saying in the intro, there has been a lot of talk about, number one, sort of the local banks' liquidity squeeze, and the opportunity that presents for other participants to come in and sort of go down the direct lending route. How are you looking to capitalize on that?
Good morning, Jumana, and great to be here with you at your show this morning. So we're very excited about the investment opportunity in the kingdom. At Gemcorp, we specialize in investing in emerging markets, and a couple of years ago, we took a strategic decision to come here and set up shop in Saudi Arabia, because we see Saudi as the most interesting global finance destinations today, with the structural reforms that the government is driving here. You have growth, economic growth at scale, at basically 4.5% for this year. You have probably the top 5 growth environments here across the G20 countries. And that economic growth ultimately creates the unprecedented opportunity for private credit and flexible capital. Yeah. And as you said correctly, the strategy for private credit is not new. We see this across the developed world, in the US, in Europe, because private credit firms like ours are complementing the banking sector to provide that flexible capital for the mid-sector company, SME companies, and that's exactly...
Well, I was going to say, who would be the target market over here in Saudi Arabia?
So here we have a very interesting opportunity across the giga projects, PIF-backed companies like Neom, like Red Sea Global, like Qiddiya. So these are basically big government-sponsored projects attracting and needing tens of billions of dollars, hundreds of billions of dollars of capital. And also you have the SME sector, because you have all those contractors and vibrant, fast-growing companies that are naturally getting a bit left behind in terms of attracting funding from local banks, because local banks are naturally gravitating towards blue chip.
Well, I was going to say, so my understanding is that the local banks are very much focused on providing the lending to those giga projects.
Yes, but then because of the credit demand is outstripping the credit growth that's happening in the economy, you naturally need flexible capital and alternative sources of credit.
Yeah, how do the returns here differ from the type of returns that you would get in advanced markets in private credit?
I think you have very good risk reward here, because ultimately the market is short on structural capital for private credit, and you have very good opportunities. So you have a lot of opportunities and very little capital. So basically, by us bringing FDI and sourcing local capital from the real money accounts like insurance companies, pension plans, to unlock and structure the capital for those investment opportunities, you see actually superior risk-adjusted return in Saudi Arabia than, I would say, Europe or the United States.
Interesting. And you're also in the process of fundraising for Africa as
Correct.
well. Similar concept. Talk us through specifically, which countries you're looking to get involved in and how big the private credit opportunity set is.
Absolutely. So we've probably become one of the largest private credit investors in Africa over the last 10 years, with around $7 billion portfolio there. The opportunity in Africa is also unprecedented, because you have the youngest population on the planet, fastest economies, growth economies there. And we specialize on funding basically four pillars: energy security, you have water security, food security, and healthcare and education, right? And ultimately across Angola, Congo DRC, Zimbabwe, Kenya. So these are markets, Ghana, where we already have presence. We have local teams on the ground. And yes, the private credit opportunity for those markets is huge.
Yeah, I mean, the thing is as well, I just said Africa, but of course, each country has its own set of challenges. You're talking about different jurisdictions here. You're also talking about different types of liquidity. How do you navigate some of those, very specific elements to all of the countries that you're looking to get involved in? Because it's a very different backdrop to what you get for, say, private credit in the U.S.
Absolutely. And that's a very good point that you're raising. Africa is not a country, and we get that question asked by our investors. And ultimately, our differentiating factors in investors that we're specialists, and we have boots on the ground. Over 3 decades of investment management experience, we have basically developed skills for risk mitigation, but you have to be local. You cannot do suitcase banking for Africa from London or from New York. You have to be local. You have to become part of the investment community, part of the ecosystem, to understand the needs of our customers locally and structure those flexible solutions, capital solutions that are needed.
Yeah.
And ultimately, that's how you mitigate the risks.
Interesting. So, Atanas, let me ask you a broader macro question. Just sort of, if you look at where public emerging market spreads are trading very, very tight at the moment. And so, when you look at the overall risk reward, and I know, we've been talking about private credit, do you think about the potential headwinds that could come through if there is a shock to emerging market credit spreads next year? Because at this point, it's very difficult to argue that, we're going to tighten another 50, 100 basis points from where we are.
Very good question. So obviously the public credit spreads in EM globally and also in Africa follow to driven by the general credit spread environment, right? And obviously, if we have a pullback in risk sentiment, you're going to see a pullback in price action in public bonds. But in the real opportunities in private credit, right? And you can actually structure private credit instruments for sovereign borrowers, quasi-sovereign borrowers, good, solid private credit borrowers, where you have superior credit fundamentals than in developed markets, which are giving you double-digit returns. And I think these type of returns are going to be sustainable because you have the economic growth maintaining this.
Okay, so then just to round things up, a couple of weeks ago in the U.S., there was a lot of concern about these idiosyncratic fraud incidents with First Brands, Tricolor. Jamie Dimon was talking about cockroaches is never just one. You have to be on alert. And I'm sure your own firm, you have very rigorous underwriting standards. But Are you worried about the rest of the universe, i.e. that, there's a lot of interest in this asset class, people are chasing returns, and that may lead to a watering down of some of the underwriting standards?
Yes, we are concerned, so we are following obviously the broader credit market closely, and as you said, we see a lot of fraud and probably fraud
yeah.
in terms of underwriting standards and documentation and
yeah.
covenants in private credit deals.
Yeah.
And I think first brands of some of those situations probably are not going to be the only ones. Ultimately, you had too much capital chasing too few assets
yeah.
and artificially generating or trying to generate excess spread. That's why we feel that structuring and investing in private credit instruments in emerging markets where you have capital shortage and a lot of opportunities, you have ultimately positive deal selection bias.
Yeah.
Right? Ultimately, you are there to choose the best deals and you drive the best terms and documentation. Ultimately, that is the long-term value that emerging market private credit presents.
Atanas, so good to chat to you.
Thank you
so
very
much
much,
for speaking to you here at FII. That's Atanas Bostandjiev, Gemcorp founder and CEO. Well, coming up, as the Middle East emerges as a global hub for private capital, as you were just speaking about, we'll hear from State Street CEO Ron O'Hanley on investing in the region. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Riyadh today. Well, as Saudi Arabia pushes ahead with its Vision 2030 transformation, global investors are looking closely at the kingdom's growing demand for private capital, a space where liquidity challenges are creating opportunity. Ron O'Hanley, the CEO of State Street, tells us his firm is also looking to expand in Saudi Arabia.
As we've seen the growth in the region, growth in our client needs here, the regional headquarters made sense. We can concentrate people here. We've also, and we've talked about this publicly, we've applied for our direct custody license. So by this time next year, we'll be a local custodian here. So we'll be able to serve clients, not just in their global activities, but in what they're doing here. And then finally, as we talked about last year, we opened our investment center here. So it's our 11th investment center around the world. So we have the full range of activities here, hence the regional headquarters made sense.
And is client activity in this part of the world different to what you're seeing in other jurisdictions?
I would describe it as changing because for years people thought of the kingdom as a place to come and get money, get investments elsewhere, and the Saudis have been extraordinary global investors. What's changed is the investment opportunities in the kingdom, really propelled by Vision 2030 and the success there. And so what you're seeing in Saudi is both outbound capital and inbound capital. And that's what you want to see in an investment center. I mean, people always talk about trade flows, but capital flows are just as important, and you're seeing that here in the kingdom.
And how would you look to take advantage of that via your own business?
Well, if you think about what State Street does, we do two things. We invest money on behalf of clients, and we service the investment activities of institutional clients. And so we've got opportunities in both areas, and our clients have needs in both areas. There's a lot of interest, for example, in investing in Saudi, but if you're a small or medium-sized investor outside of Saudi, how do you do that? Hence the Saudi ETFs that we've launched. For those that are looking to come here, or for Saudi investors here looking to broaden their investment activities, we provide a range of investment services.
And do you see that liquidity has improved as Saudi Arabia and the rest of the region focus on improving and expanding the scope of their capital markets?
It's absolutely improved, and the regulators and the policymakers are doing a great job. The big task in front of them now, which they're all working on, is fully establishing the debt capital market. And you're seeing lots of progress there, and that will be important. It's not that Saudi lacks money. But what you want to have is you want to have capital flow and you want to have velocity of capital.
Yeah.
So by the establishment of a debt capital market, by the establishment and broadening of the equity market, you're going to see that. And the signs are already there that that's going to be successful, and we want to be part of that, and more importantly, we want to support that and enable that.
Yeah. Well, if I look back more broadly at the year, it's been a year of immense news headlines, a lot of market volatility. And you look at where markets are today, and you have stock markets at all-time high, credits at the lows, but it's been a bumpy ride to get there. How has that translated into transaction volumes for you?
So where it's, transaction volumes have been high, and we've had a great year. We just reported our third quarter results. But if you think about it in terms of capital flows, about this time last year, there was a very high overweight. If you looked at where investors were invested around the world, a very high overweight to the U.S. That overweight started to come down around the election time, and then actually started to come down further at the beginning of the year. It probably reached its floor in the second quarter with a lot of the uncertainty around tariffs and where was that going to play out. Interestingly, you've seen some of that overweight return. So
Are you talking about equities here?
Equities
because not the USD.
No, yeah, I'm talking about overweight to the U.S.
Okay.
And certainly you've seen a decline in the value of the U.S. dollar, but that was also from a near all-time high. So what you're seeing is, I think, some concern and uncertainty about where to invest, but a little bit of a return. I think what would be healthy is to see a broadening of the market. It's all great for lots of investors to be piling into the U.S., but there's great value outside the U.S. too.
Yeah.
You're seeing a little bit of that, but when you look around the world, most investors are saying that there's a few countries that we want to invest in. Saudi and the greater GCC is one, and the U.S. remains quite strong.
Yeah, interesting. So, given we touched on the weakness of the USD, have you seen a significant amount of interest to buy non-USD assets, whether they other currencies, whether it's gold, obviously being very topical, cryptocurrencies as well? Do the flows back that up?
The flows do back that up, and again, when you have a time of uncertainty, and there's concern about things like the strength of a particular currency, be it dollar or any other, you do see flows into gold. And again, we saw a lot of uncertainty this year, but what seems to be happening is people may not like a particular direction, but when they have certainty around it, it's much better to be facing something you don't like than to be facing something certain. And it seems like tariffs and how they're playing out are starting to become more certain.
So from what I've read, State Street seemed to be exploring digital assets custody. Can you talk us through where you are in that journey and what upside you see from that business?
So again, we go where our clients go, whether that's geographically or the type of assets that they want to invest in. We'll either support them in that, and if you think about the fact we're such a large investment servicer, when our clients want to invest in a particular asset class, we've got to be able to support them. So we already do digital fund accounting and digital record keeping. Digital custody is something that we need, the regulators need to get together on this, but you saw what happened in the U.S. and again in geographies like here in the GCC, there's a regulatory enablement of this about to happen. True. So we're building up the digital custody abilities.
And the question that I think everybody will be asking you is, how is AI impacting your business?
So if you think about AI, all the attention has been paid on really building the infrastructure. The real value added will be when applications start coming in, and I think we're all working on that. Much of what we do is operational in nature, and if you think about an operation, whether it's a reconciliation or a settlement of a security or the movement of money and securities around, you want to do that rapidly, you want to do that error-free, and you want to do that at low cost, and AI supports all that. So what we will see is improved client experience, whether it's speed or cost, improved employee experience. If you're an employee, any one of us, there's certain parts of our day that we'd like to dispose of and do other kinds of things. It will free up employees to do other things. But then risk management and decision-making support. So the surface is just being scratched here. And I think we're going to see lots of it, particularly in a business like ours, which is so operationally intensive.
That was Ron O'Hanley, the CEO of State Street, speaking to me earlier. Well, voters in Tanzania are heading to the polls today. The election pits incumbent President Samia Suluhu Hassan against opposition candidates from smaller parties. That's after her main rivals were barred from running. The contest is effectively a one-horse race in the East African nation. For more, our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Well, Jen, it's not much of an election if everyone else has been barred from running.
Yeah, Jumana, and yet it still is quite significant, I think, especially if we note Tanzania's effective position on the continent. It has really, under President Hassan, in many ways, become one of the continent's fastest growing economies. We should take a look at some of the things that she has initiated. I mean, the IMF has said that Tanzania has, in many senses, been able to withstand a lot of economic shocks in order to become stable. Under her leadership, there have been a number of ambitious promises, including Vision 2050. The government has also prioritized things like ports that are managed by China, or ports, excuse me, that are managed by Adani and DP World. There's also a China-backed crude pipeline. And so in many cases, yes, you can take a look at President Hassan, who has been in power since 2021, and say that she has been able to stabilize an economy that, with her predecessor, who was autocratic, was not necessarily getting the same foreign direct investment that she has seen now. But there still are a number of international concerns about some of the reversing of some democratic promises that she's made. And Jumana, you noted there just one of them, which many critics point to, which is the fact that there has been a crackdown on dissent and in many cases barring of opposition candidates. But we should still note that Tanzania is a strategic economy in East Africa and in Southern Africa, though there are a lot of risks to the downside. And if you take a look at what the IMF says in particular, this election is significant because if, in fact, we do see some instability, could that potentially affect foreign direct investment and some of the reforms that they're hoping for?
Yeah, so that's Tanzania, but we've also spoken about the Ivory Coast elections earlier this week, Cameroon too. What has been the reaction on the continent to the various elections that have taken place this week, Jen?
Right, Jumana. I think we have to look at it in various approaches. You mentioned the two countries that we've been paying attention to over the past few weeks. And largely, yes, as you noted there, they have been a foregone conclusion even before voters go to the polls. And yet we do see millions of citizens end up registering to vote. We do see international watchdogs that come and they do keep an eye on some of these votes. And yet we see some of these leaders that have been in power in the Ivory Coast case, almost 4 terms that President Ouattara is about to secure. In Cameroon, almost 8 terms. And so in some cases, there is concern about what looks like democratic backsliding. That on top of the fact that, especially in the Sahel, we see a number of military juntas. And just a few weeks ago, we were talking about Madagascar, where they now have the army that's effectively taking control because President Rajoelina has fled the country. So on the one hand, there is concern on the democratic front. But then I think you also have to look at some of the wins that we have seen. In Ghana last year, we did see in Ghana earlier this year, we did see President Mahama have a peaceful election, also in Malawi, also in the Seychelles. Last year in Senegal, we did initially see the opposition candidate imprisoned, but then that was overturned, and now he is the president. And so, yes, there has been a bit of backsliding, but it does seem, in fact, that some of these voters are becoming more empowered to speak out, and that is turning into some changes in a number of countries.
Jen, thank you so much for the overview and the breakdown of all of the elections we've had this week on the African continent. Our chief Africa correspondent in Johannesburg. Well, I'm just going to bring you some lines that are breaking in the last few minutes. China has bought soybeans for the first time in months. And of course, these purchases are coming ahead of that crucial Trump-Xi meeting that's taking place tomorrow. So what we are seeing is the groundwork potentially for some deal to be announced in the coming days. So positive news there in terms of a reconciliation between these two huge economic powers. Well, coming up, we're going to be talking about the Middle East real estate markets and why it's booming. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Donald Trump touts trade deals, peacemaking, and the strength of the U.S. economy during his APEC summit speech in South Korea. The U.S. president is set to meet with China's Xi Jinping on Thursday. Asian stocks rallying on optimism that AI will continue to drive profits at tech majors reporting this week, and on growing bets of a Fed rate cut. Plus, another big earnings day with banking majors UBS and Santander reporting later this hour, as well as energy giant Equinor. Well, it's just gone 9:30 a.m. across the Emirates. It is 8:30 a.m. over here in Riyadh. I'm Jumana Bersachi, live from the 9th annual FII conference, bringing you so many of these interviews about various topics. Yesterday, we had a finance-heavy day. We also spoke a lot about private equity, the opportunity set in private capital. In a short while, we're going to be speaking about real estate. Now, before we do that, though, a quick check on markets. Building on from gains last night for Wall Street, once again, we are seeing AI optimism come through as a theme. NVIDIA is in focus. President Trump touting the possibility of NVIDIA selling Blackwell chips to China in anticipation of that meeting with Xi that's taking place tomorrow. And just in the last 5 minutes, we saw some headlines coming through suggesting that China have restarted buying soybeans again from the U.S. That was one of the key sticking points and something that President Trump was pushing for. So the groundwork is there for some sort of a breakthrough at tomorrow's meeting. The stakes are high. And of course, that's not the only thing that's happening. We also have the Fed meeting coming up later today. So keep an eye out for that. The expectation is that they will cut 25 basis points. But will they give any indication as to the future path of interest rates from here, given that inflation is still running at around 3%? And so far, the real-time economic data has actually been pretty robust as well, despite some cracks in the labor market. So those are big questions for today. S&P and NASDAQ leaning towards the green. We've got the dollar up slightly, up 0.1%. And then Brent also around $64 here. Some downside pressure, of course, as we've been speaking about, emerging. A lot of focus on fundamentals. And again, as we get into that President Trump-Xi meeting, watch out for any lines around China's purchases of Russian oil, because that also may move the needle on where the energy complex is trading. Well, as I hinted, the Middle East real estate market is booming. From Riyadh to Dubai, strong demand, record low vacancies, and growing investor confidence are driving remarkable momentum across the region. To unpack what's fueling this growth and how global capital is responding, we're joined by Christian Ulbrich, Global CEO of JLL. Really good to have you with us. Let's start by mentioning the fact that we are actually here in Saudi Arabia. I know you've got a panel on infrastructure in about a half an hour's time. So let's just start with how you see the opportunity set in real estate in the kingdom right now.
Well, the opportunity is really positive. You always have to look at the absolute growth of a place, which is really strong here in the kingdom, and then the relative attractiveness of a market. And then when you look around the world, there are very few markets in the world which offer similar growth potential as the kingdom does. Yeah. So I think everybody's pretty excited about it.
How are you seeing those commercial and residential trends right now?
Well, you have to go back to the overall GDP growth, which is strong. I mean, we will see more than 4% in the kingdom this year and probably close to 4.6% next year. That is a driver. And then go down to the demand. As you already said in your intro, the vacancy rate for office space is incredibly low. We are literally close to zero on the prime end of the market. So there's a tremendous demand for high-end office space.
This is here in Saudi Arabia?
This is here in Riyadh. And we also see a very low vacancy rate in the Emirates. But here in Riyadh in particular, the program for the regional headquarters obviously made a big push. And so overall, I think the outlook is super positive.
Yeah. Do you see any signs of overheating, perhaps? Maybe less so in Riyadh, but in Dubai, that's one of the big topics that we discussed.
Well, that has been debated now for quite some time, whether it's overheated. At the moment, we see into the residential market a very strong demand from high net worth individuals from all around the world who are buying into the residential market. I don't see this stopping as long as the world is a bit turbulent. That is a big booster for those people entering the residential market in the Emirates.
Yeah. In general, where is investor demand for real estate at the moment?
You know, from a global perspective, it is improving. It is still way below the levels we saw in 2019, but it is improving. Sentiment is improving. Interest rates are obviously an important factor, and interest rates generally are on a downward trend, and so that is helping the market trend.
Yeah. What about the knock-on effect from private equity and the fact that there are many real estate allocations that have yet to be realized, profits to be realized, yet to be monetized? Is that slowing down the broader universe?
Not necessarily. I mean, private equity has the challenge of exiting generally their corporate investment. On the real estate front, there is a liquidity in the market, so they can exit if they want to. And they have been experienced some good increases in raising equity over the last 9-10 months this year. In our own organization, Jones Lang LaSalle, we doubled our equity raise by the half of the year. We had as much as we raised in the full year last year, and that's pretty much the trend in the market.
Interesting. So I know you're going to be speaking on this infrastructure panel in about half an hour's time. There's been a huge focus, and yesterday actually we heard an announcement, BlackRock partnering up with Humane to build out data centers. How do you see the opportunity set presented by data center infrastructure, the build out there, and perhaps is there too much hype around data center build out?
Well, let's stick to the kingdom, and when you look at what do you need for data centers, you need land, you need space, you need ideally cheap energy, and you need regulation. And I think the kingdom is offering all three of those points. So it's an ideal market for data centers. So I'm sure it is certainly not overheated here. We will see many more data centers coming for the foreseeable future. What is happening in other markets, you have to go market by market. In the US, the main issue is access to the grid. There's just not enough power there. And so that could be the constraint.
Yeah. What are you seeing in terms of credits? Because you look around, say, like in the UK, defaults have started to rise a little bit. The US, there've been more idiosyncratic concerns about private credit, lending. And in the cases a couple of weeks ago was in the auto space, but still around the real estate market too. Do you have or share any of those concerns?
Well, everybody is always on the watch, but I'm not overly concerned at the moment. I think those are more pockets. When you talk to the credit card companies, they don't see anything happening there, and they are a very good indicator if we could expect more defaults from the consumer end.
Yeah, and specifically in the US, one of the big topics of discussion last year and the past couple of years has been what's been happening in commercial real estate. What are you seeing in terms of momentum and different segments of commercial real estate? How are they faring?
Well, the offices sector is in the U.S. still benefiting from the return to office. The U.S. was very slow to get back into the office. That has changed pretty significantly. The largest corporates are demanding the people back into the office. And so that is a pent-up demand, which is helping the offices market. On the retail side, we see some good demand into the retail sector. It's not across the board, but it is very healthy. So over the last couple of quarters, the industrial market is still kind of catching up a little bit. They went a bit ahead of themselves, and now they are catching up. But we are again seeing it improving. And then again in the U.S., the data center market has been the hot topic for at least the last 5-6 quarters.
Yeah, where do you see Europe and respective price action, relative price action, but also in data center build out? Because you don't really hear about any of that happening in Europe.
Well, Europe overall is obviously still challenged by their difficulty to do the necessary structural reforms to increase the competitiveness. So Europe is lagging from an economic recovery very much. Specifically on the data center markets, as we said, you need land, you need cheap energy, and you need regulation. Europe is always good on regulation. They're not as good on land, and they're certainly not as good on cheap energy. But there are areas where you see data centers coming in. There was just a major announcement of a huge data center for Google in the Munich area. So there are areas where you see data center development.
I appreciate I've taken you a bit around the world on this interview, but let me just ask you, if we zoom out, where do you think we're going to see the highest growth areas in real estate over the coming years? Which part of the world, which geographies?
Well, I mean, again, relative and absolute. The U.S. market is still very, very strong and will continue to be strong. But when you zoom out of the U.S., it's clearly India, which is marching ahead very, very strongly. I was just there 2 weeks ago, and I was really impressed how fast they are bringing up their infrastructure. And the infrastructure is the first step to a healthy overall economy. This area here, the kingdom, but also the broader area here is very, very strong. And then there is an interesting development in Japan. The Japanese economy is opening up. They're trying to tie closer to what we used to call the Western world, and that is presenting a big opportunity also for the real estate market in Japan.
So interesting. Thank you so much. Really good to chat to you. That was Christian Ulbrich, JLL Global CEO. Now, Prime Minister Benjamin Netanyahu has ordered what he calls forceful strikes against Hamas in response to attacks on Israeli soldiers in Gaza. Palestinian news agency Wafa says the latest Israeli strikes have killed at least 20 people in the territory. But U.S. Vice President J.D. Vance says he believes the ceasefire deal remains intact. For more, let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, so J.D. Vance once again is insisting that the ceasefire remains intact, and yet we have seen these strikes out of the IDF once again on Gaza overnight. What is the justification for those strikes?
Good morning, Jemima. Well, yes, indeed, this truce is just about 2.5 weeks old. This was the second big test, the second surge of bloodshed. It emerges this morning, the Israeli military saying one of its soldiers was killed yesterday morning in an attack in the southern Gaza Strip that it blamed on Hamas. That appears to have drawn that lethal Israeli response. This is something the Israelis are very unhappy with. They thought they put major warfare behind them. They still have thousands, if not tens of thousands of troops patrolling the Israeli-controlled side of the Gaza Strip as part of the Trump plan, as part of the ceasefire deal. And that bloodshed comes against a backdrop of growing rancor in Israel, in the United States, at Hamas's failure to deliver all of the hostage bodies to Israel as required of it by that ceasefire. There was video yesterday suggesting strongly that Hamas had basically dressed up a recovery of body parts as if they were found underground, whereas in fact, Hamas had been keeping them in a building. There is a sense that Hamas is drawing out this phase in order to avoid the difficult questions of the later stages of the Trump plan. But as you noted, when it comes to the major stakeholder, the major foreign stakeholder here, the United States, the guarantor of this deal, they believe, the Trump administration believes that this ceasefire is still intact. That would suggest everyone is drawing a line under this exchange of fire yesterday. However, it's certainly been jarring for Palestinians, for Israelis, and observers hoping to see the ceasefire evolve into a lasting peace.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. Oh, coming up, we'll be breaking the 3Q, the third quarter numbers for banking giants UBS and Santander and energy major Equinor next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Riyadh. Well, before we went to the break, I did say that we were going to get some Q3 earnings coming through. Let me bring you the ones that have just hit, starting with UBS. So UBS third quarter net income, $2.48 billion versus estimates of $1.41 billion. So a massive beat there. In terms of other commentary that's coming through, they have completed the $1.1 billion share buyback in the third quarter, plans up to 900 million more in the fourth quarter. The fourth quarter net profit will include $1.1 billion of integration costs, and of course that is in reference to a Credit Suisse integration still. Commentary around the outlook. The deal pipeline is looking healthy. However, U.S. shutdown might delay activity, and they see the fourth quarter NII to remain broadly stable in global wealth management and in PCB as well. In terms of the investment bank, what we got was a massive beat too. So the pre-tax profit there came in at 900 million versus estimates of 426 million. So the takeaway from UBS over here is a very big beat versus estimates. That third quarter net income, 2.48 billion versus estimates of 1.41 billion. But not just UBS that has been reporting. Let's bring you Equinor as well, the energy major. And so what we're getting here is a miss versus estimates. The third quarter adjusted operating income after tax has come through at $1.51 billion versus estimates of $1.63 billion. Third quarter total revenue, 26 billion versus estimates of 22.4 billion. So we got a beat on the top line, but that's not translated to the bottom line. Total capital distribution for 2025 of about $9 billion coming through. Other commentary, what they're saying is, well, they still see full year capex at $13 billion as well. And as I just mentioned, the total capital distribution of about $9 billion. So that was Equinor. And then finally, to round things up, we are also getting results come through from Santander, the Spanish bank. So let me just bring those to you in a moment. And here, what we're seeing is third quarter net income, 3.5 billion versus estimates of 3.38 billion. So a beat coming through on net income there. Their third quarter CET1 ratio has come in at 13.1%, again, slightly higher than estimates for that. Net loan loss provision is a bit lower than estimates, 2.93 billion versus estimates of 3.01 billion. But what we are seeing today from Santander is a net beat. And the net interest income, always important for banks with a significant amount of deposits. That has come through at 10.35 billion versus estimates of 11.18 billion. So even though we got a beat on net income, what we are seeing is a miss on net interest income coming out of Santander. So those are all the earnings that have hit in the last few minutes. And let me just bring you some lines that are coming through as well, because a side-by-side meeting is taking place between President Trump and President Lee of South Korea. You can see them chatting there, some of these live images coming through. And quite interesting, the president of South Korea has said he would like Trump to play a role in making peace on the Korean peninsula. So another one for the Trump administration to tackle in terms of conflicts. And Trump is now saying we will work to get the Korean conflict straightened out as well. In terms of other commentary that's coming through, we heard from President Trump a short while ago. He was delivering a speech around the APEC summit and talking about the importance of alliances and this upcoming meeting, the one that's taking place now between the two sides. But they still need to iron out a lot of the details when it comes to the U.S. and South Korea trade deal in terms of investments and also the possibility of reducing tariffs, as Yvonne, our colleague in Asia, was just highlighting. But ultimately, the fact that they're speaking right now is a positive signal in terms of where these trade discussions can go. And the big one, of course, will be with President Xi tomorrow. So keep a close eye on any headlines that come out of that. Coming up, private credit has emerged as one of the most talked about topics here at FII in Riyadh. We bring you some of the comments made by the biggest names in the banking industry with, stay with us. This is Bloomberg.
I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner.
Yeah.
Unfortunately, lenders make mistakes. There is fraud in markets. And, that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
A lot of the noise and drama around private credit is, somehow that there's a whole bunch of risk that's hidden in the system because it's no longer in the banking system, and that's going to present some systemic exposure. I don't see it. At some point, if the credit cycle turns down, they'll have losses.
Okay.
And those investors will have lower returns or negative returns. But that's business.
We haven't had a correction in a long time. We haven't had a recession in a long time. And so the closer you get to that time period, nobody knows when it is. You have to make sure that the clients and the balance sheet of whether it's an individual, an institution, a sovereign wealth fund, or our own bank is able to sustain that. There aren't major signs, but you're seeing, little pockets of it. You see a little amend and extend on credit terms and the like, and so we're watching it, and we're watching it very closely.
That was the CEOs of Goldman Sachs, Standard Chartered, and JP Morgan Asset and Wealth Management speaking to me on growing concerns over risks in private credit. Now, the Qatari finance minister expects the non-hydrocarbon economy to grow at an average of 4% over the next 5 years. His Excellency Ali Al-Kuwari told me that the gas-rich nation is investing in sectors such as tourism, logistics, and technology.
Qatar economy have done very well. The first half results, 3.4% growth. 5.1% came from non-hydrocarbon. So basically, the non-hydrocarbon is driving the growth, for the economy, and this is in line with Qatar National Development Strategy 3, where we are going to focus more in the diversification of the economy, and we expect the non-hydrocarbon sector to grow by average 4% for the next 5 years. IMF expectations even better, but for the overall economy at 4.1% average for the next 5 years. And again, it's going to be driven basically for the non-hydrocarbon. Having said this, still LNG, we are big in the LNG.
Of course.
Qatar, plans to expand the LNG production by almost 85% in a phased manner over the next 5 years, which is going to make Qatar responsible for 25% of the supplies of the world LNG, by 2030.
Okay.
So, yes, we are making the progress, also in the LNG area, but at the same time, our focus in the non-hydrocarbon sectors.
So what does the split look like by 2030 of oil versus non-oil then, if LNG is going to grow so much?
Today, the non-oil is higher than the oil in terms of contribution, around 60%. By 2030, because of the expansion is going to happen in the oil, we should be around 50-50, But definitely we are growing in both areas. I think this is the main story. And we believe LNG is very important. It's going to be the most important, transit energy for the world in the medium and to long term. So it's going to be there for some times, and it's going to be a transit energy to net zero. So this is something we're focusing on.
Yeah.
In terms of the non-hydrocarbon, the sectors we're focusing on is tourism, logistics, and we have benefited from a world-class World Cup, 2022. We have built the best infrastructure, and one of the best infrastructures in the world, and we built a very strong brand for Qatar, with the 2022. This is helping us now to grow the tourism sector, logistics, technology, manufacturing, and again, we're going to be, education, health, again, is going to be also on our radar.
That was His Excellency Ali Al-Kuwari, the Qatari finance minister, speaking to me at FII here in Riyadh. And then later today, I will be speaking to the Saudi Arabian economy minister, that is His Excellency Faisal Al Ibrahim. So we'll bring you that interview tomorrow. But that is it for Horizons Middle East and Africa. I'm Johannesburg in Riyadh. Stay with us for Daybreak Europe. This is Bloomberg.